Hi traders, I want to show you an example of a head and shoulders pattern or inverse head and shoulders pattern that's set up on the pound dollar. This pattern actually set up on the 5-minute chart, and I want to show you the daily chart, just show you what was going on here. We had price rallying up. Okay, so we had obviously quite a strong move up here, coming into a key area of resistance. You see this area up here, resistance, support, resistance. We then had, if you look at this area here, you see our price is trapped between this area of support. You can see we've got a good few hits across here, support becoming resistance, closes above. Remember we spoke about candle closes, comes back, retests, and then pushes that last bit into resistance. So we're really just trapped in a big range. Okay, we move over to the 4-hour chart. So this is the rally up. You can see higher highs, higher lows. We hit this block. You see the resistance area right here. You see this last bearish block right here before price rallied, and then comes back to retest this little block here. Okay, and then we start moving back down. And you see this area of support we showed you on the daily chart. You see we also have, let me just adjust this slightly, we also have this block in here. Okay, you see this consolidation, price broke out of that area. Now it's come back. Okay, so we are in an uptrend. We've hit resistance, moving back to support. Okay, so if we have a look at this area right here on a smaller time frame, okay, there wasn't anything in terms of fibs. If you draw your fibs from the very low up to the high, you can see nowhere near sort of the 38 level. So this is just a real key level of support becoming resistance, and just understanding the flows. Okay, so we from resistance on the higher time frame back into this key area of support. So if we have a look at the 5-minute chart, this is where this pattern set up, and we just compress this. So we had a drive down, then price rallied, and then we dropped down lower. Okay, we came into this key. Remember this area down here, this whole area down here is that 4-hour block that I spoke about, and that daily area of support. So we just follow price along. See how price pops up like this. Okay, when it starts to shoot up like this, you want to start thinking about the possibility of an inverse head and shoulders. You see here we have this drive down. This could be the left shoulder, this could be the head going deeper, and then you would want to look at getting in at the right shoulder. Okay, so I just take this off and mark this area up. See, we have this area here. We then have, you see this base right here and here. You see how we have this price flip. We have resistance becoming support. Price has rallied, broken the high. It's also broken a short-term trend line here. Okay, the main thing with this pattern is just understand where you are on the higher time frame. Okay, now in terms of trading the pattern, ideally I'd like to see the right shoulder come down and equal the left shoulder. When it's very deep like this, you can see it's pretty close to the lows like here. Okay, you can also look at referencing other areas in the base. So you see, for example here, this here, if we just zoom this up, you see this dealing point right here. We have resistance here, closes below resistance, then it closes above and becomes support. Okay, that's where price started to break up. Okay, and it doesn't come back to this area. If you also put some fibs on here again, the fibs are normally secondary to me. I like to watch the actual dealing areas here. So you've got a choice between a few areas. You've either got this dealing level here, okay, which is what I normally prefer to look at. When it's very deep like this, you've got to also have a look in this base here, because very often price will just come down and spike sort of just above this level. Okay, especially if it's very bullish. So have an open mind in terms of this. Unfortunately, it's not a black and white, you know, one does all kind of thing here. But you see this 79 level lining up with this area right here. Okay, that's not a bad area at all. If you want to look lower, that left equals right area, you could also look at an order over there. Okay, now as I said, we never ever know what's going to happen next. In terms of distance, it's like 7 pips. Okay, so work out your risk on the larger patterns. Your risk is obviously going to be much higher. The way I like to trade it anyway, stop below the low. So if you look at around the 79 area, okay, you can see here, stop below the low, it's 13 plus spread. So you're looking probably around 16, 17 pips, somewhere around there. Versus if you're down here, you're probably looking around 9, 10 pips. Okay, so about 7 pips extra. So you've got to take that into account in terms of your risk model. Okay, so we decide to take an order in at the 79 level. Okay, with a stop below the low, we're still quite comfortably within a decent risk parameter. And in terms of targets, with these patterns, watch your highs. Okay, good place to take profit. To see this area up here, good place. Remember also, this area up here is, we just step this down a little bit, this area up here on the 4-hour chart is this absolute key area. You see this block right here, this big bullish candle. Price breaks out of there quite viciously, comes back, so that's a key area of resistance right there. And if we just move back now to the 5-minute chart, okay, this is the area right here I'd be keen on. What you could also look at, which we haven't really discussed in this course, is scaling in at different levels. Okay, so you could put half your position on at the higher level and half the position on at the lower level. Okay, so you still got a stop below the low, so if price comes down, you get filled on sort of half a position, or you know, so you've got half a position there, half a position here, and you're averaging your risk. You've still got a stop in there, so you're not averaging on an actual losing trade, because it's a planned position. Okay, I'll sometimes do that when I'm not quite sure where price may stall. So let's step this forward. We just forward a little bit here. See price starting to break down here. If we go to our order platform, I'll show you what we can do here. In the example, we can go pending order. So 2 potential areas here. You see 58.41. Buy limit. So we got 58.42 plus the spread is 45. Okay, with a stop loss below here. Let's see, what is 15, 16, 17, 18. So we'll put 18 pip stop there. Place that in there. Now what we can also do is, actually we can halve this. Let's halve this position here. If it'll let me, no, it won't. Okay, so I'll tell you what we'll do. We'll put in half a position at 58.45 with an 18 pip stop. Okay, so half the position we'll look at around that 79 level. You see this base here, resistance, becoming support, and then we can put half a position in at this low down here at slightly lower. The left equals the right at 58.35 plus the spread is 38, with a stop loss at the same area. So the stop loss is at 5827. So you see how this one is got a much smaller stop. Okay, so they're the 2 positions. Okay, so if we average this out, we're looking at 14.5 pips between the 2 positions. Okay, and what that does is it gives you a better feel if price does move lower, or you know, if it only moves up to or down to the first area, at least you get taken in on a part of your position, so you don't miss out on the possible trade. Okay, and overall, as I said, you're only looking at 14.5 pips risk by doing it this way. Okay, stop still in the same place. In terms of targets, this high up here, okay, remember it's a key area of resistance, good place to be looking. So for now, we'll leave the take profit open. I want to see what happens around this area, but we've got in mind this higher time frame area from the 4 hour and daily. Just step this forward here. See our price drops down to the 70 area, 70.7, rallies up to this block, then it spikes down. You see it comes right down to that 79. This area right here, resistance, becomes support. And then we see this heavy rejection. Okay, it's an indication that we're likely to head higher from here. Maybe get a spike lower. Okay, so it doesn't look like price is coming back down. When price starts to release like this, you see it starting to take these highs out. You could look to reduce some risk if you wanted to. As I said, I'm not very big on taking my risk out of the trade until price really starts to get going. If we have a look at the hourly chart, let's just see what's going on there. Let me just get rid of this fib level. So you see our prices spike down. We're now starting to release off that area. Nice base. You see that block? See our price comes down, spikes that last little candle there. Nice pop up. Little test deeper. Okay, you see the orders filling slightly deeper here. So price is moving in our direction. I haven't been taken in. We've still got, you see, one position working 18 pips up. Other position we've still got resting in there. I'll leave the other position for now with the stop where it is. Price may have a tendency to come back and just pop slightly deeper in here. You see this block right here. Okay, we haven't tested that yet, so we had a partial test here on this candle. So we'll leave that position in there. In terms of take profits, 58.82, just below that level is where I'm interested to see this area here. Okay, top of those candles, resistance. So 58.79 is where I want to look to take profits. We're going to modify 8.79 and I'll modify that. Okay, so I'll just step this forward. See our price, you want to see this area hold now as support if we want to see a leg up. Okay, so getting a little bit of a bounce there. You want to see this area hold ideally. If you want to, you could get your stop up to break even here. As I said, I'm not that keen to just get to break even for the sake of it. Okay, I'm not that aggressive with the stop. Price moving down here a little bit. So have a look at the hourly chart, see what's going on there. So we had a little pop up here, nice bullish looking candle here. Let's come back. Have a look at where price comes back to. You see this rally, it comes right back and test this bearish candle here. You see that? Test that area of support and we start to bounce again. So that's a good sign for us. And also have a look at the 4 hour chart. Okay, so we've had a bit of rejection here. Okay, so we want to be a little bit cautious here. Possibly see some selling pressure coming in at some stage. Step this forward. See how price comes up, test this block here on the left. See how it's rejecting here. So we're currently up 21 pips. Got a tiny little trend line here. We want to see, try and hold there. Just compress this and have a look at the overall structure. So left shoulder, head, right shoulder, filled around that first area, hasn't quite come down low enough to fill the second position. What I'm going to do is I'm going to now take this second order off. Price is starting to chop around a little bit for my likings. I'll just step this forward and see what happens. So we've got this little block here. See this area hold the support. See the little bounce there. Come back, testing resistance now. It's really just chopping about here. It's starting to get, you see it late in the session here. In terms of time, liquidity in the market starts to slow down. Just step this forward. Stop loss is still at the original position. Okay, so we're grinding up higher highs, higher lows here. Got this area here, see this little base here. What we can do is move our stop to break even now. Starting to break above these highs. Okay, so stops now break even. We're breaking above this resistance area, looking for this target up here. So he comes back, testing this area. We want to see this level hold now. See, it's coiling up here. Looks like it's going to pop. One last pop higher maybe. Alright, so there's the pop higher. We've just been taken out. I'll just have a look at that position. So we're out for 34 pips. Okay, so not a bad little trade there, coming off that key high time frame area. And I just want to show you the 4-hour chart. Don't get greedy on these things when you're trading up to the block. Okay, this area up here, you want to be very cautious about that. See that big spike up on that 4-hour. Okay, and now we start to release back down to new lows. So that was an inverse head and shoulders that's set up on the 5-minute chart at a key daily or 4-hour area of support.